Okay, October 1st, 2024, and we definitely have some changes happening. Let's get right to them. All right, so first we're seeing actives are up. They've been climbing, this whole year, but they've started to climb a little bit more rapidly. We'll get into why. Under contracts are up a little bit, but not by much, although that's against the seasonality right now anyway, so pretty unique. New listings, it says down here, but really they're kind of flat. We'll get into that too. Contract ratio is down. It's been declining kind of since the beginning of, I would say, June, maybe May. Then Cromford Market Index has been sliding down as well. So we're now down to 95.5, which technically favors buyers. Keep in mind this is across the whole valley. So let's get into it. So that purple line that you see with the arrow pointed at, that's showing our active inventory, and it's been steadily climbing this whole year, where oftentimes it'll be declining just in the springtime and then turn around in the summer. But just the past 8 weeks or so, we've started to add some more homes on. So that's partly because interest rates went down, so sellers thought, okay, we're about to have some buyers enter the market. I'm going to list my home, get out in front of them to be listed once they come to the market. Also, a lot of these sellers are also buyers. In order to buy their next home, they need to sell their home that they're living in right now. So that added to sort of the general collection of people that were putting new listings on the market. As you can see right here, there's a little bit of a data lag. So you can see that in August, the number is 8106. So it actually reported closer to 7,800 last time, or this time last month. So we're probably going to see something similar to that. So September is probably going to it's going to come in around 81 or 8,200. Now, those two numbers are quite a bit higher than the past few, right? So normally during the summer, we're seeing fewer and fewer listings go online. But the past couple months tells me that sellers are getting out there trying to see what they can get done, and that's leading to an inventory of about 19,000, getting close to 20,000 for the metro. I think that what we were expecting kind of happened, just not maybe to the degree that we thought it would, but we finally broke through and had an increase in our number of contracts being written. You can see the red and the blue, those other years, the trend actually starts to go down, but we finally broke on through to the other side, baby. Finally have something to report on. I guess I'm not really super excited for one side or the other, but I'm just excited that there's something to talk about, some sort of change, because it's been pretty consistent throughout this year. So we finally broke through the number of homes that are under contract on any given week as compared to the previous year. So that's why you see all those lines start to chop down and down and down and down. We've been shrinking in the volume of homes that's going under contract until 3 weeks ago, we finally exceeded that number. How long we'll stay, a higher volume than 2023 or maybe even 2022, I don't know. We're going to have to see. Check with me in a month. Contract ratio is down. Now, 38.1 is not dismal, but it's definitely not a hot market. It's technically a warm market. This is across the board, so not everybody is feeling the same type of scenario. Let's look at a Cromford Market Index. That's our forward-looking index. We've gone below that balance line, and technically we are in buyer territory once we get below 100. We are seeing some ability to negotiate out there, but sellers are holding pretty strong on their prices. We even see some cancellations due to that. They said, okay, well, if I can't get my price, then I'm not going to sell. So lots of different pieces of information that apply to that. Little index that couldn't. Man, we really thought at some point the interest rates were going to turn this index. We thought the higher demand was going to turn. But for now, it's just it's continuing on down. And we don't know when it's going to turn around. But it looks like it might be decelerating. So we might see it turn. I really highly doubt it that it'll go all the way down to 90. But we'll watch this the next couple weeks. So this slide shows you exactly why that single number for the whole metro doesn't really serve everyone, right? So you've got Fountain Hills at the top, which means you have a higher demand in general for those homes and you have a lower supply, and you take that all the way down to Buckeye or Maricopa. Those are in the 60s. That means you have a pretty decent amount of supply, pretty limited demand. That means when those buyers go and see the homes, they're probably going to have a little bit of time to think about it, to look at some other homes, to try and negotiate. it's just a different type of environment. So it's important to understand exactly what the mechanics are of the market that you're operating in, and even down to the city. Let's go even smaller. It could be down to the neighborhood, down to the subdivision. You're seeing a little bit different buyer and seller behaviors. So something to always focus on is get hyper local, talk to an agent like me that knows how to dig all this information out and really get a good footing and come up with a strategy that works for you, whether you're a seller or buyer. So until next time, this is Joe Gill signing off.